CRTD currently following our implied path. To be honest, that first video that I put up on this, which was printed on, let's see, about 2 weeks ago, this is the kind of video that actually makes me lose subscribers. So please take a quick listen at this. Here we go. Now, that metric actually lands us right in confluence to the 2.618 golden mean at 70 cents. As you can see here. So we were currently sitting at, let's just take a look. We were currently sitting at $1.51 at close on this date. And I actually ran a back test on this just to be able to see how low it can go. And my metrics came back, the statistical data came back with a 70-cent suggestion. So that type of news when I release, it makes me lose followers, but you know, like I say, I'm not gonna give you guys FUD. I'm gonna give you guys the truth, and that's really my promise to you. Okay, so what's gonna happen to price action now that CRTD has been following our implied path? Well, let's go ahead and find out in this video. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a CRTD, technicals, statistical, and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community within Discord called ARCab. But with that said, let's go ahead and dive right into the charts. Okay, so we are looking at CRTD and the daily chart here. For the new viewers, this is a descending broadening wedge that we've been riding. It's actually a wedge that's pretty popular within a bear market. It actually represents anxiety within the trade. So this, I mean, nervousness, if you will. And that's definitely what it's been doing. So we were able to identify based on this. Please know that there's a wick here, okay? We were able to identify based on this downtrend that we were potentially going to make a large move to the upside. And how is that done? Is usually done by following the golden rule of three, so which consists of 3 tests of the resistance before a pullback or capitulation, and then an impulsive move to the upside in an attempt to break out on to achieve a true breakout on test number 4. Okay, so you're looking at test 1, 2, 3, and number 4. Now, usually what happens after a test of that number 4 breakout is that we have to come back to be able to confirm our newly converted resistance into support before continuing on to the upside. Okay, so this formation itself is an indication of a trend reversal in general for the CRTD asset. So this is a good thing. It really means that it's going to be a reversal signal. Okay, so but it does have rules according to the playbook, and we do have to follow them. Okay, so now the closing that we got, let's see, we're at 73.61, and this is where we were suggesting for us to land. Excuse me, you guys. Man, starting to feel a little weird from dinner, but yeah. So this is where we suggested, and we surpassed it, of course, and we ended up buying or covering some short positions right before the 3.618, which could have been at about 44 cents. But these are the metrics you can see for the candles here. So if we hover over that last candle that had the lowest point, it looks like it went to 48.40. Okay, so definitely a very important move that we recovered the newly converted resistance into support so that we can be able to confirm it once more before a continuation onto the upside. So as you can see here, since we're on the daily chart, you can see this massive candle actually touched right at the support line and bounced back. This line actually surpassed it. It bounced back. We actually tried to come right back in it and recover the channel, or the wedge, but it did not work. It actually bounced back once more. This could potentially be enough test for us to be able to continue on to the upside, but we do have more things to verify. Another reason that we were able to tell that there was a downside coming is simply by using one of the most easiest aspects of trading, or not easy. It's just very popular to use amongst the traders, is a supply and demand areas for resistance and support touches or range trades, so that we can be able to see where the asset is going in particular. Okay, so I drew these by hand. They're not really figured in any other way other than a discretionary manner, right? So we did I did tell everybody here the move to the, I'm sorry, I did tell everybody within this chart here that we were going to reach down to that 70-cent zone, which is actually very much in confluence with this supply. With this demand support, which is right over here. You can see 67 cents. The values are right there. So, we drew a box here for a potential reaccumulation area for continuation to the upside, and it has since been used and actually recovered. If you can actually hear that tiny voice right outside, that is my toddler knocking on my studio door. He hears me talking now, and he's upset. He's actually with mom decorating the Christmas tree, and he's not okay that I am in here making a video for us. So you guys, let's go ahead and continue here and see what else we got. So another good thing that we did recover is in fact the 10-day simple moving average, in which we actually lost. This is the 10-day simple, the green line. Okay, so you can see that we were above it here. We were above, testing until we finally failed it and actually capitulated straight to the bottom, and have since recovered above the SMA 10. And now we're currently using both the SMA 10 and the blue 100-day simple moving average as a form of support. Now, if it weren't for the 200-day simple moving average on the 4-hour chart, there's no telling what else could have happened. But in technicals, we do have another form of support in which we definitely used. We need to know these areas of support for continuation, okay? So this candle actually reached a low of, again, the candle analysis or data is up here. So let's hover over that low candle and just take a look at what we have. So we have a low of 48.40, and this was suggesting 45.41, the 2-spot 618 golden mean. Actually, this was an inverse fib that we actually took so we can get some downside targets. So now let's move on to the RSI to see what else we can come up with, at least for the coming sessions for CRTD. Okay, so yeah, this is very important for us to look at. Okay, so new viewers, this is the divergence chart that I have up here for you, so that you can be able to understand how an indicator like an RSI or a MACD, but in our case we're using the RSI, how this can work alongside price action into indicating a potential upside or downside, versing the price action and the signal line or the signal of the RSI. So in this case, the opposition of both actually create a divergence. So we noticed that we had two primary drives. They're very, very thin, but if we just zoom in, you can actually see them here. We noticed that we had two primary drives of a hidden bearish divergence, which happens when price action makes a higher low. So here's the bearish side, and here's the hidden bearish divergence, particularly to what we're looking at. So price action makes a higher low when the RSI is making a higher high. And in this case, we did get that. And we noticed that we had two primary drives of that hidden bearish divergence, in which were absolutely realized. This was just another piece to the puzzle for us to be able to acquire and factor into our strategy. And this is how we were able to see the downside coming up. A very interesting thing has happened since we have had that capitulation event. So you are looking at now 1, 2, 3, 4, 5, 6, just too many drives, many drives of phantom bullish divergence. Now, I know I don't have it phantom here, but phantom usually happens when the price action is making a lower low through price action in order for us to get to the destination of where we're currently sitting. And also the RSI making a higher low structure here. So we definitely have some higher lows and lower lows in price action, which would be right over here. This right here. So this is, we're looking at regular bullish divergence. My apologies. So yes, this is 6 drives of primary bullish divergence that we have in play currently. And I do not believe that it has since recovered, considering the amount of bullish activity that we have signaling from the RSI. So let's go ahead and open up a multi-pane so that we can gain a bias for direction in the immediate short term at least. So we're going to open up 30-minute. At the top, we're going to do a bi-hourly here. Let's do a 6-hour and a daily, since we already saw the 12-hour with the divergences, okay? So for the new viewers, I actually have a chart here for you to take a gander at. Let's quit this. And this is my diagram that depicts the properties of my RSI. Sorry guys, this is my sound card. Let's move that to the side. And let's move this to the side. Okay, so yeah, so you're looking at 1, 2, 3, 4 zones, of which are right over here. So those 4 zones are are primarily the areas that I look for weakness or strength based on the signal and price action. Okay, so let's start with the immediate short term. This is the 30-minute time frame. Excuse me. Apologies. Okay, so yes, we're looking at the 30-minute time frame here, and you can see that it is suggesting a continuation to the upside. And we definitely got a rejection from the border of the bear strength percentile versus bear weakness percentile. So we definitely rejected there and are now at the very, very shallow areas of the bear weakness percentile, which only indicates a potential or a likely jump into bull weakness percentile. Okay, so we do have the moving average here. We have that to combat, but I believe that in the immediate short term, this is likely to cross into bull weakness. Okay, so 15-minute micro time frame. It is definitely suggesting an aggressive upside almost immediately for the starting of the day, for the next trading session, at least as early as maybe the early pre-market. It has made a bullish cross above the moving average, which is represented by this pink line. The RSI is the purple line, the RSI signal. Okay, so it is suggesting an aggressive upside. So let's move on to the bi-hourly RSI right down here and take a look at what's happening. Okay, so we are currently rejecting the bull strength percentile and have now entered right at the center of, at the junction between of the bear weakness percentile, particularly to the deep areas or the shallow area. So we're now suggesting a continuation onto the upside. Moving average is suggesting we're actually using the moving average as a form of support. This is very likely to continue on to the upside. Okay, so now let's look at the 6-hour and see what we have. So the 6-hour is suggesting a continuation onto the upside. Slight rejection from the bear strength percentile. We do have a hint from the moving average. It is starting the curve since the price action is leading towards the upside. But the danger here is within the 6-hour is that when we're in the deep areas of any zone, we're likely to be gravitated into the opposing zone. So yeah, in this case, we would have to watch out within little pivots like this. It's not significant, or it's not strong enough just quite yet. And another reason why is for example, the daily. The daily is suggesting a continuation to the downside, and it is potentially entering the bear strength percentile. We have rejected it one time. There's no telling if we're going to be able to reject it or not. But since we do have, let's see, a potential upside move for CRD for at least the early pre-market to maybe mid-session, close to the end of the day, there is a potential to where we actually may start to lose what we've gained towards the end of the day or beginning of Tuesday session. Okay, so now regarding the upside continuation that we're getting for the immediate short term, we can actually take a look to see what we have as far as resistances. First of all, we were using this trend line here to actually, you know what, let's get rid of this since this has been invalidated, but we are going to get some targets right now. Okay, so and you know what, one more thing, let's bring up some EMAs and see if there's anything. Okay, there we go. Yeah, so I can see us very likely reaching, I'll give you the range right now too, you guys. Please know that I'm not a financial advisor. Please take whatever I do show and iterate within these videos as a form of entertainment, okay? Do your own DD and we'll be okay, you guys, okay? So now, yeah, let's close this here and gain a target for the coming session. So we're going to take it from the swing high of that candle there to the swing low, to the total swing low. And actually, you know what? We'll take it to the hold on. To the low of day from Friday. And here we're going to be able to see some confluent targets. So we're going to do this just for the immediate short term and see what we have. Okay, so the 50-day exponential moving, the 30-day, sorry, this is the 30-day exponential moving average, which so happens to land at about 95.34. It does have some confluence with the 1.72 and the 1.618. Very likely for us to find some type of resistance in this range. So somewhere between 95 and 95.59 to be exact, and 99.50, 99.34. So one more time, that's going to be, let's see, 95.48, and then to the 1.618, 99.34. Okay. If there is, I mean, this is the golden mean. The golden ratio is usually a place where the trade likes to take the price action too. Okay, so if we're looking at price action being right now at the 77-cent area, taking it up to the 1.618 will actually be about a 29% gain from our current position. So that's fair enough. Another thing that we can consider is the fact that we do have the the ascending channel, the resistance here. So there is a potential to where we can actually come back and test this as a valid form of resistance before coming back one more time and potentially finding some support at the 81-cent level after an upside move. But the upside move I do see likely for and actually just a limited upside. It could be particular to just Monday and further downside on Tuesday. Now the downside may not be what you think. What I'm looking at is like if I were to draw just an implied path, and please don't take this as anything like it's actually going to happen. I could see like a thing like this. Okay, so we'll go up to here, come back, and then the next day potentially do something like that. Then we'll eventually come back and reach that zone and so on, So it looks like we'll potentially do something like that. That's what I'm kind of getting from the suggestions from the RSI. Okay, so yeah, if you have some traps. If you're holding a bag and you're afraid of what's going on, yeah, definitely look for between, I would say discretionarily, I would say right at the 95 to be safe, 94 to about $1.11, just 94 to $1.11 could be an area for us to be able to remove risk from the table. Okay, but I do expect this to actually run some sideways thing like this, not an impulsive move to the upside whatsoever, at least in my opinion. Okay, I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Twitter or on Discord. I'll make sure to leave the links in the description below. And another thing, you guys, please, I'm not ever going to message you first. Okay, so whatever messages that you're getting on YouTube when you comment and it says let's talk or do like, or I'm not going to give you my phone number. Okay, that's what I'm trying to say. I don't have a WhatsApp. The only accounts that I am using right now are just the Discord. Okay, which also there's a bunch of imposters in there as well. So the Discord, the Twitter, and this YouTube here. Okay, so I don't have a WhatsApp. I will never ask you for your bank information. Please protect yourself. Okay, and yeah, but that's it, you guys. I wish you a good night. I wish you well and a great weekend. And I will catch you at the bell on Monday. Adios.